All right, guys, what is up? Sergio here. Hope everyone is doing very well. I'm doing fine as well. Thank you for asking in advance. New day, new week, new dashboard. Brighter Data 2.0 is out. So today, what I want to focus mostly on is, of course, I'm going to do some TA, but I think first, I'm gonna focus more or less on the dashboard. If you have any questions on the new dashboard, this is probably a good time to ask them. Please let me know if you can hear me correctly, by the way. And let me check my sound settings. Yeah, should be good from my sense, from my side of things. But we're gonna do some TA. I will share my thoughts, which are still exactly the same as they have always been. Hello, Yelena. Good to see you. But they have still been the same as they have always been, right? You know, I have been looking at this retracement. Let me check if I have it here. Still have it, right? Where I said price should not get here. Well, so far we're front running it very slightly, right? So until this, I said I will review my stance on this if price gets here. But until it does, my view, at least, is that this should be retracement before the next leg up. That's the high time frame thing. But I want to focus more on the lower time frames and the dashboard because we just released it. What was it? 2 days ago, right? So I know you guys probably didn't have that much time yet to go over it. So if there's no questions, I understand. So what I'm going to do is I'm going to go over it a little bit, see what I'm looking at, and through using it, we will all learn, right? I'm also still learning the new dashboard. I've already been using it a bit longer, so I'm more used to it. Obviously, I made it as well, so I know what's up. But I would just want to go over this. Oh, yeah, Fartcoin. Fartcoin is now in the dashboard. Maybe actually a good one to look at Fartcoin because Bitcoin is not doing anything. So we do have Fartcoin, and Fartcoin actually has a lot less data than all the other coins. So previously, I would not have put Fartcoin in the dashboard, in the previous dashboard, but now we have these, notifications here where we can see how many data points we're actually using. So in this case, we're using 84 data points. So now, you can make your own decision on whether you want to use it or not, and it's automatically going to give you a warning if you don't have enough data. So if you go to the distance statistics, that uses half of the data points of time statistics do, then here, for example, you can immediately see, okay, there's only 42 data points, so you want to be careful, right? Insight may be less reliable, interpret with caution. So there's more wiggle room to put like assets in that have less data than what we had before, because now there's actually a feedback system. But Fartcoin is in there. It's one of the few assets that's actually, trading very well. So that's why we put it in there yesterday. But let me first just go over Bitcoin. So first of all, we can now type and search here, right? If you were there yesterday or Tuesday in the stream, you already know that that's possible. But what I did on Tuesday is that I really explained the dashboard, the changes. What I'm going to do today is that I'm just going to go over the technical analysis and see what I'm looking at. So first things first, what I personally like to do is immediately jump to the summary. What I have is I've bookmarked saved. So for example, here I have a personal bookmark, summary, weekly plus daily. I just click that. It immediately takes me to the summary page for the weekly and the daily, just as I have set it. I usually use 4 years for the weekly time frame, 1 year for the daily time frame, because I simply think that is a good time range to be in. You don't want to have too much, too little data. And 4 years is 100 data points on the distance statistics, 200 on the time statistics. So more than enough. 3 years is probably also fine, to be honest. So let me get the weekly on right there. All right, so first things, if I see this, then I'm not going to take any pivot too seriously because there is non-action, right? Unfortunately, there's not really much going on right now. Like, this is clearly a very tight range. So for me, this is already a warning sign where I'm going to be like, okay, I'm not going to pay too much attention to whatever the statistics are saying in case of, this holding or this holding, because in my opinion, both of them have a good probability of holding or a more or less equal probability of holding or not holding, because very simply put, you're in a very tight range. And what are you going to do when there is a tight range? Price is going to look for liquidity, and the liquidity is resting, both here as well as here, small S&P. So there is some case to be made there that, it's also a very news-driven market. So whatever comes out, Trump drops the tariffs on China, pump some massive escalation or recession fears, dump, right? A lot of it's going on. Anyway, let's look at the statistics regardless. So first of all, is P1 at a logical time and place? Basically, what you want to have with this one is the only thing you want to look out for is that it's not very high, right? That's the only thing you want to, if this is like 80% plus, 90% plus, you want to be very careful, because that means it got put in very, very, very early. And usually those get taken out, because we saw that in Tuesday's stream. But in this case, that's not the case, right? Because the weekly high is formed at Tuesday 1:30. Obviously, we know that most P1s are actually already put in by that time, right? So in this case, it's not it's not a warning sign, right? This is more like a warning flag. I might actually change some of the phrasing, because I know there might be some confusion here. But this one is just, what we saw on Tuesday is that it was at midnight 15, there was a daily P1, and it said there was a 85% chance, if I remember correctly, or somewhere 90% or something of P1s formed later. And then you just know, okay, if 90% of the day is actually formed later than what we currently have, then there's a good chance you will take it out. What we also saw then is that there was the weekly P1 had a very high chance of being taken out. Let me see if I can still find that screenshot. Yeah, let me actually just show you that one, because I think it's important to go over, because I was discussing it in real time, and then actually it happened, because I think I posted a screenshot right here. There we go. I probably cannot paste that. Yeah, too big. That's what I figured. All right, but let me then just do it differently, because I do want to have it on here. So this was the example I was discussing live on Tuesday, and this is the new metric. That's why I really want to drill that home. All right, so there we have it, nice and big. At this point in time, we had the weekly P1 here, right? This was the old weekly P1 at the time of, what am I doing? I can just, I have an indicator. So let's just use the indicator instead. There we go. So we had the weekly P1 here and the weekly P2 on Tuesday, right? So this was the setup. And then what we were looking at, and if you might remember on Tuesday, I was saying live as it was happening, I was saying, okay, well, very likely we're going to take out the weekly low. Why? Because of this first metric, right? So this is what's because the value was high. So it said weekly low is an unlikely time, 88.2% of P1s formed after Monday 0000. So this P1 was put in right at the weekly open, right in the first 30 minutes, because on the weekly time frame, this is looking at 30-minute granularity. So it's really looking at, okay, how many 30-minute blocks or how many P1s got put in after this 30-minute block, so the first 30 minutes of the week. And it's 88% of P1s, right? So you can say that 88% of weeks form a P1 later than actually at the weekly open. And this is, once again, what I meant when I said a couple of weeks ago, like, okay, this new dashboard is going to help us greatly in recognizing P1, P2 flips, because very often we had good continuation statistics that the distance, the distance displacement showed us that there was very little time to come back and take out the weekly low, but that, occasionally it happened. And in my opinion, the times where it happens is mostly in these occasions, right? Where you have the P1 that close or that early, and not only that early, but also that close, because this is the distance statistics that I explained on Tuesday as well. And we saw that only, 100% of P1s, weekly P1s, form further from the weekly open, right? So I already went over this on Tuesday as well, but you have this weekly open right here, right? And the weekly P1 was put in very close to it, and literally 100% of P1s formed further than that, right? Over the last 4 years. So that weekly low was very, very low probability, because both of these measures were high, right? They were high, which indicates that, okay, it's very unlikely to put it in this early, and it's very unlikely to put it in this close. So what you really want to know with this first metric, you have to see it as a warning signal for that P1. If it's very high, and I'm talking just very high, then you want to be careful, right? That means it's got to either put in very close or very early, and most often they get taken out. So in this case, I was saying live as I was streaming, like, okay, the weekly low is probably going to get taken out. And you have to remember that, these statistics would already indicate this at these highs, right? Or actually already from here, like this whole way up, this statistic doesn't change, right? So as soon as it gets put in, this whole statistic doesn't change. So at some point you're going to take it out, which is what happened after, right? So I really want to make that point clear. I hope it makes sense that this first one is a warning signal that if it's high, wow, that's a shitty circle. If it is high, if it is very high, this one, then you just want to be careful because you know that P1 is an unlikely time, unlikely place, and it might get taken out later on. Let's actually look at that just for the sake of practice on the daily session. So let me just go to the daily session. New York session started 25 minutes ago, so you'll probably see what I mean here as well in live time. Let us go down to the, oh, and by the way, if that's, so you only want to look out for if it's high, right? If it's low, that just means that it's not necessarily a warning signal or anything. So right now, it just means that, there's more confidence that it will hold. So I want to look at the session. Why is this not showing up? All right. Interesting. Nothing is showing. Oh, shit. Sorry, my bad. I'm on replay mode. All right. So here we have, we just got the daily off. The session. And now, so this is a very interesting way of using this is what you basically can use that second statistic is for wickless candles. So right now we have a wickless candle on the session, right? We see that this session opening candle here has no wick. And we know what you often see is that, well, candles without a wick get taken out a lot. We can now see with statistical precision how often that actually happens. So if we go to the session time frame, for example, here, and there we have it, here we have it, here we have it, there you go. See, so now we have statistics for the wickless strategy. Session low at an unlikely place, 100% of P1s formed further from the session open. So we can see that New York session, at least in the last year, never put in a session P1 this close to like right at the New York Open, right? It never happened in the last year. It just doesn't happen. I mean, if you want more confidence, we can even look at, let's say you look at the last 3 years or something. I prefer to use the last year because it's plenty of data points. And it also, then it's also, because the more years you use, the less susceptible the data is going to be to recent changes, So you don't want to use too little, but you also definitely don't want to use too much. So I try to go for, just somewhere around 100 data points. I think 100, 200 is pretty good. But, now I'm looking at the last 3 years, and even in the last 3 years, it never happened, right? So in the last 3 years, we never had a session P1 that was this close to New York Open. So what you know now is that this session P1 is going to get taken out with, very high degree of certainty. Obviously not 100%, because just because this is saying 100% doesn't mean that there's 100% chance, right? It's just indicating that in our selected time period, it never happened, right? That it never happened, but it doesn't mean it cannot happen. So historical occurrence does not mean chance. It's an estimated probability, right? But it's very, very high. And besides that, we also have a session low and an unlikely time. 91.9% of P1s form after 12:00. I mean, that's that's wow, this is actually crazy. I'm looking at this. Let me check something. All right, so anyway, it's also an unlikely time. Let me first finish my train of thought before I start chasing shiny objects. So it's a very unlikely place to put in the session P1. It's also a very unlikely time to put in the session P1 because 91.9% of P1s of the New York session form after 12 p.m. So this one is going to get taken out, right? This one is going to get taken out, which is useful because, I mean, imagine you're now looking at long because you're like, oh, well, the New York Open looks bullish, looks very bullish. Well, it's not that bullish, right? Because we have the statistics and we now know this got taken out. So I hope that really explains at least the first metric. That the first metric is, but this one I find really interesting. Yeah, I'm gonna look into that now. But so this first line here is really okay. If it's high, be careful. P1 is not a good statistic. So or not a good, what do you call it? Not a good pivot. So even if we would have favorable distance and the classic statistics we use, if this is very high, you want to be careful, right? It's a warning flag, flagging in your face. That's why it's red. Hey, warning, P1, not at a logical time place. So cool to see. Let's see if we see that taken out during this stream. If it doesn't get taken out, that would be very rare occurrence. So one thing I'm actually noticing now is the second metric, which is why I was kind of surprised. Well, let's just stick with the last 3 years. Why not? So this is looking at the 5-minute granularity. I want to go to the session, not the daily. And by the way, the point is just for me, I'm just using this just to show you how to look at it, how to interpret it. Oh wait, it just changed. It just changed. Let me check something. Yeah, okay, so it just changed. Right, because this was first 100%, but we put in a new P2. There comes the rejection. I mean, this is going to get taken out. If I would have to make a bet, I would be very confident making a bet that this is going to get taken out. Because if it doesn't get taken out, that's the first time it happens in 3 years, right? So that's a pretty good bet to bet on. But this was 100%, and the reason why I was so surprised because we had a 12.15 P2 at that time. Because this is looking at what this is looking at is, and what I explained as well on Tuesday, it's simply looking at, on the time-based perspective. So, okay, we have a P2 at this time right now. How often do we have a P1 that is at this time from the P2 or later, right? Because we know that for a P1 to be put in, we need a P1, P2 flip. So if this needs to become P1, what needs to happen is this, right? We need to take out the current P1 below, which will happen, most likely, very, very, very likely. So and we know that, if we're going to get a P1, P2 flip, then it's going to happen from either this time, right? So 12.15 or later on, because, that's simply the only options we have left for a P1, P2 flip. Of course, right now we have a lot of options left. So what this is pretty much looking at is, once again, it's looking at, okay, how many P1s formed at or after 12.25, the current P2, so it's 12.25 actually. Right, you see that on the 5-minute time frame, 12.25, and then what you see here is that happens here 78.5% of the time. So this just means that 80% of P1s form later than the current P2, right? So we have also, in this sense, a very high chance of flipping it, because you just know that 80% of P1s form after this period, right? So somewhere within here, you still have an 80% chance of putting in that P1. So that probability will decrease as we put in new P2s. But another statistic showing, okay, we still have a very high likelihood to flip this thing, right? So both of these are saying that the P1 is very unlikely to hold, right? Because it's a very unlikely time. And there's also still a high chance of a flip risk because we have the current P2 at 1225, and we know that 80% of P1s get formed at 1225 or later. So we still have plenty of opportunity to flip that. The thing I was very interested in, so let me see if I can see that here actually. Damn, I don't think I have the 5 minutes. Yeah, this is some pro actions you can actually take. Oh, I do have it. So here you can know what I'm doing now is that you can actually see on 5-minute granularity when these pivots are being put in. I didn't discuss this because I don't think, I think it's going to be too confusing for most, but you can drill down on these statistics. You can do that for everything. But what I wanted to look at is, okay, how often does it happen in the first 5 minutes? And I'm guessing that it was 100% earlier when I was looking at the summary page because the data had not been loaded yet. So it was not actually 100% because the session probably just started. So that's probably it. But for example, you could even say for the weekly, or even for the monthly, if you look at the monthly, so if you have the monthly here and you drill, you can press this, go to the next level in the hierarchy. What basically you can do is look at, for example, single days, right? Instead. So you can look at, okay, which days of the month put in a P1. I wouldn't do that myself. I think it's too granular. But what would be interesting, for example, is if you go down even further, you can see, okay, which days put in monthly P1s and monthly P2s, so that's why this that is why this one drill down function is there, but it's not very necessary. It's just like, if you like to further export the data, then it's very nice, right? But anyway, so this is the session statistics. They're right now telling us that, okay, purely the time statistics, very low probability to hold the low. There's still a high flip risk, right? And it's also very unlikely that the P2 is in because 99.8% of sessions form a new P2 after 12:30. So the logical conclusion is that you're looking for a rejection. Now you're also at this point of control, right, of this mini range that you're in. So that would make for a logical point for a rejection actually. And what you're looking for is to take out at least this this one right here, this low. And by that point, you can look at statistics again, very easily. Once that gets taken out, let me see. Once that gets taken out, we can look at statistics again to see, okay, now we took out this, and we know we're going to take it out. What are the statistics? What are they telling us now? What is this same summary telling us? Because then these statistics will have changed, right? So this is actually very nice. Man, Hamza, don't be begging on stream, man. All right, so what is very nice is that these things are going to be changing as the session goes on, and it's actually very nice to look at these. So what you can normally do is have these next to the daily statistics, for example, but the daily is pretty involatile at the moment, so I don't think it makes a lot of sense to actually go through that because, here it's not high, so it's daily low hold. It is quite an unlikely place, though. 80% of P1s form further from daily open, so that is actually interesting. We can look at the daily there. Daily low hour 3, daily P2 hour 7. So there's a moderate flip risk because only 34% of days would flip P1 from hour 7 or later, right? So somewhere after this. So you wouldn't want to see this high taken again. If you want to take the low, you prefer not to take this out because then it becomes very low probability. Obviously unlikely that P1 is in. So this is the only red flag. You're like, okay, 80% of the times P1 gets formed a little further. it's not the most unlikely, to be honest, right? It's not that you say, okay, it's not like the 95% or the 99% you're looking at for a session, right? But still a little bit of a warning sign. But other than these are kind of like, they're not very super biased to any one direction, right? Because this is now moderately unlikely to flip, and this is like a warning sign. So it's like kind of, it's both are like in between, right? So I wouldn't be very confident in saying that, okay, we're going to take out that daily low. However, you could become more confident and that's why the session is so nice, because say, for example, now, we take out that session low at some point, which would have to happen here. Yeah, something like that, right? You take out this session low, which is not going to happen by the looks of it. Then we look at statistics again. Maybe we get to see it in a bit, and we'll just see whatever this is saying. If these statistics then flip bearish, right? So if they say like, okay, session high is likely to hold, then you know that if that's the case, you see that how likely is the daily P2 in? Well, very unlikely, right? 100% of days move further, and 97.7% of days form a new P2 after 7:30. So you know there's going to be a new P2. So we know two things then. We know that the session at least needs to take out the session low, and that the daily high and low are not in, or at least the daily P2 is not in yet. If the session low gets taken out, we can look at these statistics again, and we can see what they're saying. If the session is saying a further downside, then we can be very sure that the daily low is going to get taken out, and we're going to go further from there. So I hope that part makes sense. But yeah, I don't know if we're going to actually take out that session low in this stream, right? So we'll have to see. It is right here. Okay, so the daily right now for me, not really saying anything very convincing. At this point, could be either way, right? If this would happen, then you know that session, the daily low is probably not getting taken out, but that would make for a good short opportunity to take out the session low, right? Because that one we know it's going to get taken out. So it really depends how this gets taken out. If this happens and we have at this point, would you target daily low? Probably not. However, if this happens, right, then you could be more confident, or at least more biased, that the daily low is going to get taken out, especially if the session statistics flip bearish, because the session lasts until 8 p.m. So probably, whatever the New York session is going to go, in which direction that's going to go, that's where the session or the daily high or low will be put in. Finally, let's look at the weekly time frame again, because that's where we started. So once again, let me get the weekly on here. And after that, I'm going to go to the overview page, and we're going to look for some interesting opportunities right now. Maybe Fartcoin, who knows? All right, so once again, we have Tuesday high, Wednesday low. We can do the same thing. We see, okay, there's no warning signs here in the first one. There's a low risk of flipping, because only 18.8% of weeks flip P1 after putting in a P2 here, right? So only 18, what this is saying, only 18.80% of weeks put in a P1 in this time zone, right? So in this case, this would be like a 1 in 5 occurrence. However, if I see this, once again, if I see this range, then if it was ever going to happen, this would be a good place and time to do it, right? Because you're in a compact range right here. And I mean, any big news or what could set it off, in my opinion. So that's something I would hold in mind personally. In the TA, distance could still flip, more or less 50-50, but we do know that it's very unlikely that the P2 is in, because 90% of P2s form a P2 after Wednesday, 1 o'clock, and 100% of weeks form further than negative 3.9%. So what we know with a very high degree of certainty is that the weekly high and low are not in yet. However, I think tomorrow is today. New York already closed, so that we have to keep that in mind, right? New York's closed definitely tomorrow. I don't know today, but the statistics are slightly biased for this one to hold, right? Because it's just statistically more unlikely to put in a P1 this late in the week and then flip it, right? But in my case, if I look at this and I see this is also, moderate flip risk from this distance. So what this is saying is that, well, actually 45% of weeks put in a bottom this far below the weekly open or lower, and then go up to take out the high, right? So this is really not it's not telling us that this weekly P1 is safe, right? It could still be targeted. It's more or less a coin flip from that perspective. So the only statistics you really have in your favor of the weekly high holding is this one. 1 in 5 weeks would take it out though from this time. And once again, if that's ever going to happen, it is going to be from this little range. So I personally would not be paying any attention right now to the weekly because it's just very unclear, right? A little bit of TA combined with statistics goes a long way. So yeah, I would not dare to say make any predictions on the weekly here, right? I wouldn't dare it. It's too unclear. All right, with all that said and done, let's look at the overview page, the new overview page. Well, I mean, like a lot of it is still the same, right? It's not completely different. There's some new assets, but I want to take a look at if we can find any asset that's maybe behaving in a weird way, as in that it's actually doing something. You know, maybe it's Fartcoin, and maybe there is something to trade for us there. So this one's actually going to be a little slower than it used to be. I really need to update that. I know where it is, technical story, but I will make sure it gets a little bit faster. But there it is. So immediately what you notice is that there's big retracements going on now, which means we're going to see P1, P2 flips. If you see, oh, this is such a great example. Fuck yeah. Exactly what look at this. Beautiful. I'm just taking a screenshot in case it actually gets flipped. Oh yeah. Yeah, that's nice. Let me just get all these. This is really nice. This is really nice. And I'll explain to you in a bit why this is nice. I just want to have this one load up like this. So what I'm doing now is that I'm simply selecting all the rows in the top table, and what it's then gonna give me is that on the time-based table, it's gonna show me only the rows I have selected, right? So basically what I'm saying is here, it's okay, I'm gonna select these assets, now show me just the time statistics for these assets. So now they're showing up, and what we can do is quickly screenshot that. All right, so here's my whole point about why I said we're gonna have a lot less P1, P2 flips that are gonna catch us off guard. So for example, if we have PopCat USDT is bullish, right? And these were our old metrics. So forget about percent of P1s further. We see the P1 flip risk is 27.9%. And this one is more conservative than the one we used to use, right? The one we used to use would have sat here maybe, low 20s or something. The reason for that is that I'm filtering more on it. Now we're really looking at, instead of looking at just the days that had a P1 that far above the daily open, what we're looking at is, okay, how many days actually made it this far? And then, so how many days have a high that is this high above the daily open, and how many of those took out the daily low? So it's a more accurate representation. So what you would have had first was 22% or something, let's say 22%, because this one is therefore more conservative because it's a subset, it's a sample of the total size. But let's say this was 22%, then what happened is that you would see, okay, 22% and 100% chance of more distance, right? Or chance 100% of the weekdays would have more distance. So you would say, okay, that's a good setup for continuation plays, right? Let's go to PopCat and just check that out. PopCat US dollars. All right, it's actually bouncing again now, but what is, I still think this will actually take out wait, is this the right one? PopCat USDT, percent of P1s further. Wow, that's crazy. That's actually crazy. Because it's not even. All right, so PopCat is a volatile coin. You know that much. Let me check here. 1240. Oh, wait, I'm looking at the session statistics. That's why I was confused. All right, anyway, I will still explain the point. If you're looking here at PopCat for the session, it's still a good example. I just need to go to the session time frame. So if we would be looking at this in a previous way, you look at this session and you say, okay, PopCat, only 22% flip risk and 100% see further distance. So I'm going to look for a continuation along here, right? You would say, I'm going to look for something like this. However, this is immediately telling you, look out, right? 97.7% of P1s, the session P1s actually get formed later than what we have right now. So this is the statistics we discussed earlier, is that, okay, actually there's a very high chance to take that out. So in this case, you would not be looking for that anymore. You would be looking for this to be taken out just like that. So that's the reason why you want to be very, very, very careful with these things now. Or at least, not very careful, but that's the reason why this statistic has been added, because now, previously we had only these, we would immediately see, okay, this is a probable continuation play. But what we have now is this statistics, and once again, if it's high, that's a warning sign, right? The higher it is, the warning sign. And we see, well, 97.7% of P1s form later or form further from the current P1, right? Because also this one is right at the session open. So it's the same setup as with Bitcoin pretty much. And therefore we know that, okay, most likely that thing is going to get taken out. And therefore you want to be very, very, very careful with actually longing that. So now immediately, instead of saying like, hey, I'm looking for a continuation trade, what this is allowing you to do is like, okay, no, actually, that looks like we're going to take out the low, right? Because we're bullish, and that means P1 is the low. And if we have percent of P1s further, that's 97.7% of times would be taken out. So this is immediately very, very, very obvious. Then we can go here, PopCat, and we also see that, well, 87.4% of sessions actually put in P1 later. So once again, that is a warning signal. We still have a high flip risk, 70%. So everything here is indicating downside. So I hope you see how this statistic, this new statistics, is helping you, prevent P1, P2 flips. Because at this point, you're just looking at this and you're like, okay, this is not looking like the very best of pivots. The only time it is going to hold, and well, this one is just very bad, but the only time it is going to hold is on very trending days, right? So if you have, or trending sessions in this case, those are the times it's going to hold. But it makes sense that most often that doesn't hold, because the markets range 80% of the time, right? The markets don't trend all the time. In fact, they range much more often than they trend, especially this bull market, man. It's just ranges, and then we have like 2 weeks of trend, and that's it, right? Or, less, I think 23 at the end, we had 5 weeks or something. And then the rest is just range. So I hope that part makes sense. I will use this new summary page or overview page to really look at, okay, where are any good setups? I think this one doesn't make sense. It's probably inverted. I'll look at that, note it down. This should be 0.01 or something, right? But I'll look at that. Current retracement doesn't seem to be showing up very, very correctly at the moment for the session time frame. But let's say, for example, now I've decided, like, because of this PopCat USDT, I'm like, okay, I want to trade that towards the session lows, right? That's what I want to trade towards the session lows. So what I would do then is now, with this new setup, I would go to the summary, and this is the reason why I made that summary, because now I can just select, okay, I'm going to look at PopCat USDT, and I'm going to look at, well, let me actually do the daily in the session, PopCat USDT. And then I'm just going to look, and this page is now going to give me a very nice overview of what's relevant for PopCat USDT, like the single asset summary page, which is going to be very nice to really determine, okay, where do I want to trade this thing, right? And then I can see, right, the session I already know, very unlikely low, on both an unlikely time and an unlikely place, right? From distance, actually, and it is once again, right? So this is where the computing comes in, that people are like, okay, but there's a low P1, P2 flip risk, but at the same time, P1's in an unlikely place. How can this be? The reason is that, these two things explain different things, right? They're not connected to each other. You have to see, just with TA, you're stacking confluences, right? What this is saying is pretty much, it's just looking at, okay, where's the current P1? What's that at a logical distance? Like, how many P1s get put in further from the session open, right? And in this case, that's 97%. This one is looking at, okay, how far did the session move towards the highs, and how many of those then went down, right? And that's saying, well, only 25%. Only 25%. So both of these are measuring different things. They're not inherently related to each other. They do not explain each other. They do not influence each other in any way. So what that means is that both of these statements are true. They're explaining different things. What this is saying is like, hey, 97% of sessions form a P1 that is further than what we have right now on PopCat USDT. What this is saying is that, well, this is the wrong one. 25% of sessions make it this far up, followed by a move back down. So both of these are objectively correct. The way I would, so both of these can be true, right? You can have then a low flip risk in that sense, as in like not many days, 1 in 4 day sessions would take this out after moving this far above the session open. But at the same time, 97% of session P1s get put in later than this right here. So how I would read that, okay, there is a low flip risk, right? Not many sessions move this far up above session open and then come down again. Right? There is a low flip that doesn't happen a lot. 1 in 4 sessions, not completely unlikely either, but still the minority. However, if it's ever going to happen, it will probably happen in this situation where we have a session P1 that is put in at a place where only 2% of session P1s get put in, right? So yes, it is a lower likelihood in terms of distance. However, it is probably elevated. This risk is elevated because we have this session low at a very unlikely place. So yes, it only happens 1 every 4 sessions that this happens. But if it's ever going to happen, this is a good day for it, right? So if it's ever going to happen, this would be a very good day to do it. So once again, you're looking at that session low to be taken out. It's the same on Bitcoin, right? It's the same setup. And then you can look at the daily statistics, right? So say you're looking for a short there. I mean, this is not my area of expertise. This is way too low time frame for me. But say you would be looking for a short there, because this works on all the other time frames as well. I'm just discussing the session because this is what's relevant and actual at the moment, and actually going to give us a good practice. And then what I would do is, okay, so where are you targeting, right? Are you looking at the daily low? Well, we can see there's no warning signs here on the daily low. It's not at a very improbable time. It's a moderate flip risk, right? 34% of days flip P1, so slightly more unlikely. And in terms of distance, it's a low flip risk. So in this case, I would say, okay, it's actually less likely that we're going to take out the daily low compared to the daily high. But once again, where did the daily go? Let me get those in. But once again, this, it's a tight rates, and it really depends on, okay, how are we going to take that out? So if we go for it's the exact same setup as a Bitcoin. So if we go for the high here first, then you're looking for a reversal to take out this session low later on. However, if you do this, right, and then the session statistics are unfavorable for taking out or reversing and going higher, then it's going to be the low, right? But in this case, the daily low is so close to the session low that by the time you get here, it's actually quite likely. If you look at this, well, we know that you're probably going to hit this today. If you're already that close, then it seems reasonable you're going to take out the daily low as well. And we know that 98% of days form P2 after 725, and unlikely a P2 is in because 96.1% of days move further than 9.5%, right? So we know that P2 is not in yet, and we know that the session low is most likely going to get taken out. So you're looking at either this or this, something like this, right? But you're looking to take out that session low. So I hope that that makes sense. Let's do one more. Time is it 13:58? Yeah, let's do one more. We'll go to the daily overview page. Check what Bitcoin is doing. Still the same. So we know with Bitcoin's the same thing, right? It's very this just rarely happens. In the last 3 years, it never happened that the New York session put in a wickless low or high, right? A wickless low or high in the New York session never happened. So that means in between 12 p.m. UTC and 8 p.m. UTC, which is not the actual New York session. I'm aware. It's the timings we use. So we know this is going to get taken out, right? And it's almost 100% bet, not 100%, but we're looking at that. But then let's look at the daily. Okay, so that one is not very interesting. And in this case, what you're looking for is you want to have a low flip risk of this, right? If you're looking for continuation trades, you want this to be low, this to be high, and this to not be too high. Right? This to not be too high, at the very least. So only a 10% flip risk. So that's low. 80% of days would have P1 close to buy, so that's not ideal what you want to see. Let's see if you can find one that is really, really nice. So this one, for example, is pretty nice. Here you have Solana. So P1's further is 53%, so that's not a weird name. It has a good position for a low. There's a 1 in 5 flip risk. And 84% of days you see more distance. So what we can do again, we go to the summary. Actually, I'm just do daily plus session. I'll look at Solana. Now I've seen, okay, it looks like this thing is going to go higher. We can simply look at Solana here. Go to Solana here. Solana USDT. It's already moving higher. And then we can do the same thing and we can see, okay, well, for now though, you wouldn't want to take a long because it has this exact same statistics, right? 92.7% of P1s form after 12:00 for the session. And as the session low is at an unlikely place, 92.2% of P1 form further from session open. I hope you can see how much easier it is to interpret these statistics, right? It's taking us literally 5 seconds to see that, okay, this low is most likely not going to hold. At the same time, the daily statistics are looking reasonably favorable. 30% of days would flip P1 in terms of time-based, and 20% of P1s would flip based on distance. So let's say 1 in 5, 1 in 3, somewhere between, so 1 in 4. Yeah, you kind of combine. There's no warning signals here. So you would say that, okay, it's actually more likely that you're going to take out the high rather than the low. But at the same time, we know this is not a good session low. So what we're looking at is, well, I mean, either this would happen, but I think that would be unlikely to then flip from there. So what is more likely to happen is that, well, at the very least, we want to wait to see for this low to be taken out. And then maybe you can look for an entry towards the highs, right? So I hope you can see how this summary page really works with that. Because we see for the day, well, actually we use the overview page to find assets, right? In this case, we saw Solana. Okay, very nice. Looks like it wants to go higher, albeit not the best setup in my opinion. I think there's not perfect setups today, which is also a thing. However, if we look at the session, right? So we do see, okay, there is some probability of higher. When we look at the session, immediately we see, okay, we're going to take out that session low. So if we want a long, great. But now's probably not the time because we have a high probability we're going to take this out, right? So I hope you can really see how easy it is now with that summary page. And I mean, I'm just saying it's easy. Maybe for you it's not easy. And if it's not easy for you, I would really like to know because that's good feedback for us. And you can, we can find ways to make it even easier to interpret. There's a very, very, very good chance I'm going to change the wordings of this, right? So for example, this flip risk, I might change it a little bit to be a little bit less confusing because that's the whole idea here, to make everything as least confusing as possible. Antonin, what's up, dude? Thank you for the work on the new dashboard. Love it. Amazing to hear, man. Is the stream recorded? Yes, you can look it back. It's recorded. I'll post it in the Discord. It's recorded. You can look it back. All right, so that's the summary page, right? Everything is indicating that we're going to take out the session lows later today on pretty much all assets, Bitcoin, Solana, I mean, all the other assets you saw. But I hope this really kind of, I think, yeah, we're 50 minutes in. I think this is where I'm gonna cut things off. I think I went over a lot of the new things, how I interpret them, how we use them, how we use different timeframes together, how we use the overview page. So I really hope that part was clear to everyone. I really hope you enjoy using the new dashboard, but I really want to emphasize that, just because I'm constantly saying like, okay, this is this is great, this is easier, this is God knows what. It doesn't have to be easy for you. And if it's not easy for you, I would really like to know, because any friction that you might have, another person might experience as well. And that's the very thing we're trying to take away. So once again, feedback is very much appreciated, and it doesn't only have to be that you like it. Of course, that's also very much appreciated because it's also feedback. But any questions you might have, guys, drop them in the chat. Let us know. Any friction, anything that's not clear is a valid question. Right? So I'm going to leave it at that. I think it was a nice session. We looked at some cool statistics. We know that session lows are going to be taken out with a very high degree of certainty. So I'll drop it in Discord when that happens, if that happens, right? No guarantees, but very likely it will. So I want to thank everyone for their attention, for joining me on this first proper live stream with the new dashboard. Many more to follow. I'll be back now with weekly streams, at least weekly streams now that the new dashboard is out. So I will catch you on the next one next week. Thank you very much. Thank you, Elena, and speak soon. All right, guys. Ciao, ciao.